All right, welcome to The Explainer. Today, we are breaking down an incredibly powerful technique that traders use to improve their timing and dodge some really common traps. We're talking about the break and retest strategy.
So let me ask you something. Have you ever entered a trade right after a big breakout only to watch it just completely reverse and stop you out? Man, it's frustrating, right? You see the price blast past some key level, you get all excited and jump in thinking, this is it, this is the big one. And then, bam, it slams right back down. What you thought was a breakout was actually just a trap.
Well, the good news is there's a strategy designed specifically to avoid that exact trap. It's called the break and retest. And instead of, impulsively jumping in, it teaches you to wait for a specific confirmation, a retest, before you even think about making your move.
So here's what we're going to cover. First, we'll get into the why behind the retest. Then we'll walk through the 3 core steps, learn how to read those crucial confirmation signals, and wrap it all up with the most important part, the trader's mindset.
Okay, so before we dive into the how-to, we absolutely have to understand the why. I mean, why doesn't the market just shoot up in a straight line forever? Understanding the psychology behind this move is the key to actually trusting the strategy when you see it happen.
What's so fascinating is that the market isn't random, it's more like a little 3-act play. Act 1, the breakout. Buyers get really excited and push the price way past a key resistance level. Act 2, profit taking. The people who got in early, they start selling to lock in their profits, and that selling pressure causes that pullback you see. And then, Act 3, the retest. This is where the bigger players, the smart money, see this little dip as a discount, a perfect opportunity to get in at a better price right at that old resistance level.
Okay, so let's get into the practical side of things. We're going to break this down into 3 simple, actionable steps. Think of this as your tactical blueprint for the whole strategy.
First things first, you have to get a handle on market structure. The market is either going up, creating higher highs and higher lows, or it's going down, with lower highs and lower lows. This strategy only works when there's a clear trend. You absolutely need to know which way the river is flowing before you even think about jumping in.
And this quote just nails the most important rule of all. If the market is just chopping around, going sideways with no clear direction, you do nothing. You stay out. I'm telling you, trying to trade in a sideways market is a classic trap for beginners. Your discipline here is everything.
So it all boils down to this 3-step process. 1, identify that clear trend. 2, spot a convincing break. You're looking for a big, energetic candle that slices through a previous high or low. And 3, this is the hardest part, you wait. Do not chase that breakout. You have to patiently wait for the price to come back to you. All right, now for the most critical part. How do you know a retest is actually valid? Because listen, just seeing the price return to the level, that's not an entry signal. You have to wait for confirmation from the price action itself. This is the moment of truth. So at that retest level, you're basically a detective looking for clues. You want to see things like long wicks poking out, rejecting the level. That shows buyers or sellers are defending their turf. Or maybe you see tiny indecision candles, like dojis, which signal that the pullback is losing steam. These patterns are the market's way of telling you it's probably ready to continue the trend. And this makes it crystal clear. In an uptrend, that old ceiling, the resistance, becomes the new floor, the new support. So you want to see long lower wicks showing that buyers are stepping in to defend that new floor. In a downtrend, it's the exact opposite. The old floor becomes the new ceiling, and you want to see those long upper wicks that show sellers are now in control. So we've gone over the mechanics, right? The strategy itself is pretty simple, but applying it successfully, well, that comes down to something that you won't find on any chart. It's all about your mindset. And let's be absolutely clear about something. No trading strategy, not this one, not any of them, works 100% of the time. And anyone who tells you otherwise is, frankly, not being honest. The goal isn't to win every single trade. It's to have a system that gives you an edge over the long run. So look, your success really depends on these 4 pillars. You have to have the patience to wait for that perfect A+ setup. You need the discipline to stick to your rules no matter what. You must manage your risk on every single trade by knowing your stop loss beforehand. And finally, you have to be objective. Trade what the chart is actually telling you, not the story you're hoping for. And that is the bottom line. Learning to spot this pattern on a chart is the easy part. The real challenge, the thing that truly separates successful traders from everyone else, is having the discipline to patiently wait for it and then act without hesitation when it finally shows up. The strategy is simple. The real question is, can you be disciplined enough to follow it?